The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome back, folks. We appreciate you growling and prowling with us out here. Right now, you get the Dow down 221, Nasdaq's off 59, S&Ps are off 24. Yes, they're big numbers, folks, but they're going to get a lot bigger out here. This is going to be one nasty day. This is early, no doubt, for those kinds of numbers. If you were in front of a machine last night, it was pretty amazing watching. I was actually, let's see, I was actually trading at about 8:30 and 9:30. When this thing came out, because it was pretty wild. You know, you had the downdraft out here yesterday, and what happens after a downdraft like that? They got the NQs up about 11 or 12. The S&Ps, I think, were up about 6 at that point, off the closing print, which ended up being about a 50% retracement of the downdraft. And bottom line is that hit a couple positions, and then all of a sudden I turned around and looked at the market, and it went from up to down like in a heartbeat. And what that was all about is that the Chinese came in once again and turned around and devalued the yuan once again. Now, what was intriguing about that is that it was fast, furious all the way down in an extraordinary way. The press out here this morning, it's absolutely hilarious, because going across the financial news on a continual basis was saying, oh, they were supporting it at the end of the day. Forget it, folks. Okay, bottom line, it is what it is. And we're going to lower price. If we go overseas and we take a look at overseas, and the reason I'm saying that we're going to be a lot lower price, we're still not even down to compare to where Europe is. And we're going to be following Europe's footsteps very quickly. You have the FTSE is down 1.3%, the CAT's down 3%, the DAX is down 2.8%. Our Dow's down 1.3%, the S&Ps are down 0.9%, and the NASDAQ is down 1.3%. Now, if you go inside the NASDAQ, what you're going to see, which is not cooperating just yet, I suspect it's going to, but it's not cooperating yet, is the IBB. The IBB is at 364. You know, it's pounding into the last low out here, which is 361. It's only down 298. That's going to fall apart. Just a matter of when it's going to fall apart. It looks like it's not going to fall apart today, however. So what that does is that inside the texture of the NASDAQ, the NASDAQ is down good, don't get me wrong, but when that IBB falls apart, see ya, don't want to be ya. Inside the Dow out here today, this is what you have inside the Dow. There's only one Dow stock that's positive, that's Merck, that's up 3 pennies. The largest downdraft is JP Morgan, that's 187. Now, we've been talking about the financials, folks, and what does happen is this. It seems, and nothing is always the same in the marketplace, but it seems that the financials are always the last indices or sector to fall apart. We got it happening today. The JP Morgan has been hanging up here really nice. It's down $1.86 right now. You have volume of 976,000. That is saying you're going into this lowest swing point out here from the 7th with volume. That is a heads up, because if you, depending on how long you've been in front of a machine, once these financials fall apart, man, these things are fast, furious, and all of the above. Goldman Sachs is down an additional 458 today. That actually start leading the charge on the way down. Goldman Sachs had the high out there of 218. Right now you're at 196. You broke lower yesterday. You broke with volume. If we take this back, put this on a weekly basis, you can see what's 195 is the first area. You break 195 and you get the Goldman Sachs has big problems, huge problems. Okay, so Boeing is off 369. Apple's a leader on the way down also. Apple, of course, was great on the way up. It's problematic on the way down. What Apple's doing out here today, you're breaking a swing point, and it's going to be an ABC structure on the way down. That B point on Apple, folks, is only 16 million shares. We've already done 6.6 million. So let's check it out. So you got an A point, conservatively the A point. I'm not taking the gap. Okay, so what happened with Apple is this. Apple was 132 on July 21st. It gapped away and gapped down to 127. The 132 to 127. I'm going to take the 127 because what happens is that gaps actually act as swing points. So if 127 is your A, your B point is 112, which gives you, what, 15 bucks. 15 is going to give you 104. And right now we're at 110.98. Inside the NDX 100, let's go see what the strength is versus the weakness. And there's not one stock inside the NDX 100, folks, that is positive. That is like insane. You have JD.com down $1.63. NXPI is off 477. That's getting whacked. Holy cow. Let me just look at that. That's an Apple supplier, by the way. Yeah, that's getting whacked. It's down at lower levels. You have Yahoo. Yahoo is down $1.83. The strongest stock inside the NDX 100 is Liberty, which is down a penny. You get Fox down 2 cents. Regeneron is off 4, and you got SBA Communications is down 12. Now, let's go over to the gold contract. What do we have with gold? Bottom line, what is so cool here, folks, if you happen to be in that market, is this, is that the texture of the metals market versus the equity market is absolutely divergent in the aspect of how metals had been trading from 2001 to 2011. Okay, so check this out. This is you want to wrap your head around this if you're in this market. So 2001 to 2011, I remember when I started the gold report, folks, okay, is that the aspect, I felt gold was coming off the bottom. I remember, you know, first couple calls that called in here said, start looking at gold. Gold was at 252. We get in at 282. So we rode that baby up. And what was so intriguing inside that gold market for me was that gold was moving with the S&Ps, which I said, wow, this is really weird, man. You know, you're thinking you're getting in the gold market for divergence, you know, diversity. Bottom line, that isn't how it worked, okay? It went with the market. Now, after the high in 2011, what ends up happening? You get whacked big time, right? We come down. And as I could see the texture, and you know, depending on how long you've been listening, I've been bringing this up for about 7 or 8 months, that the correlation I was expecting may be different and could be different because of the fact, because gold had already got smoked, the equities had already got smoked, where the S&P, Dow, NASDAQ, small caps had gone up for a long period of time. Well, the proof is in the pudding right here. Okay, we'll see if it continues, but I expect it's going to continue. And what it is this, is that gold is moving now, the equities are moving now, and it's the only thing that actually are moving inside the marketplace. And they're moving exactly how I like to see them move inside the art of time in the trade. Wide price spread, accelerated volume. They've already tested their lows. Some of them have tested dramatically lighter volume. Now they're coming off those price points with juice. Now what that does, that goes back to how gold actually traded in the 80s and the early 90s, you know. So we'll see where this does shake out. And what I expect that's all going to be about is this, is that if we go over to the dollar, what you're going to see is this. It totally makes sense, okay, that the dollar should have went higher. But, you know, bottom line is it couldn't handle it, right? And when the dollar did go higher, it did what it should have done. Now, on a technical basis, you know, bottom line, the dollar is breaking a swing point today with volume. It's going to take it apart, okay? The swing point we're talking about is 96.36. See ya, don't want to be it. This dollar wants to go after its lows of June 18th. What I think has to happen here, right, is this. This is a trip, man, okay? So check it out. That normally you'd think that, okay, the dollar is going to go higher. Well, it really doesn't have to go higher. It's still going to be the best currency out of all the currencies, but what's going to happen is that all the other currencies are going lower. So as all the other currencies go lower, what ends up happening? That gold is worth more money. And gold's going to be worth more money because gold is priced in U.S. dollars, you know? So this is just a whole nother cycle, man, that you got to wrap your head around. And it's going to be a trip watching this whole thing shake out. So money is what? Money is only a perception, and money's used to buy, barter, all of the above. What would happen is that the dollar still will buy more, even though it's at a lower price. Gold will buy more because what ends up happening is that gold is priced in U.S. dollars, but guess what? The rest of the currencies are all going down. So that's what I think is happening on the larger macro deal. Now, what does that do? That puts juice behind the gold market, silver market, gold equities, silver equities. And, you know, we'll see exactly if they can come off these lows, if they can take out highs, if they can take out swing points, if you get buyers, if you get all the above. What I suspect we're going to get out here probably this afternoon is the gold market right now is up to $11. You're down 127,000 contracts. That's going to be good. We're going to end up doing 150 or something. Last night, well, let me just see last night if I didn't see it come across that the GLD had to buy anything last night. Let me see. Yeah, okay, so they didn't have to buy anything last night. I suspect they're going to have to buy tonight. Right now, the GLD owns 667.69 metric tons. And as soon as they have to start buying, folks, there she goes. What that would add up to, the GLD is going to buy, puts pressure on the physical market, gold goes up, equities go up, all of the above. Dow Industrials are down 235. You get the NASDAQ off 73. S&Ps are down 26. Gold's up 11. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You got the Dow off 262, the Nasdaq's off 85, S&Ps are off 30, and folks, just please get your stops in. If you're a long-term deal here, just get your stops in. I want to show you, bottom line, a few different things, but one of these equities, in fact, I had this on the daily newsletter today, and it's not that, this October 2014 level wants to get hit. If you want to see how fast and furious that it can actually be, I'm going to pull this up here and just show you just how quick it can be. So Sun Edison, folks, on the July 20th was trading at $33.45. It's at $12 right now. Well, when you look at it, it was screaming, just like the market's screaming, to go to October 2014 levels. The difference, of course, is that you're talking about all of the 2 weeks that it gets there. It's a wicked heads up. And it's not like other equities haven't gone there. Many, many equities have gone there big time. And this level, inside this type of equity, not only went there, it blew it away. This equity, whatever the, let me see, let me just pull this back a little bit more. This equity's dead meat. You know, this equity is going to trade down to $6. Let me see what this equity does. Manufactures semiconductor, solar energy technology. Bottom line is that it's done. That is a huge heads up in the context of where we are. Why? Because what you do have is that, just to refresh your memory, as to where the S&P is versus where I think it's going to test, is that right now we're at, the cash S&P is at 2059. Well, the highs of this level that I'm talking about are at 1912. So, you know, you're talking about 140 points down at the high. The low is 1820. You know, what we're going to see out here today is something that's pretty severe that I think we probably haven't seen in, you know, 5, 6, 7 years. Because if we take a look here, watch, if I bring the S&Ps up, and it's only Wednesday in the week, which is really dangerous, folks. Okay, let me see. So if I bring your S&Ps up, you know, we're down 31 right now, but we can be down, let me see. Let me see what the swing low is down here. So that swing low is 34. Yeah, we're going to be down $40. I mean, it's going to, the first swing low, which is the July 6th swing low, that's basically 2034. And if we pull this up, yeah, it's already broken. Yeah, okay, so we got an ABC down right now. This just broke it. So your A point on this is 84. Your B is 54, $30. Your C is 67, so that's 37. So that's where we're going. 2037, and right now we're 2049. A to B equals C to D. You broke it intraday. Bottom line, that's where, you know, this market's going to basically come down into those levels. Gold's got action, man. I mean, this is going to be just absolutely wild. You know, you got a good trading market out here. You just have to basically move, folks. That's what it comes down to. Gold right now, we're going to be at the 1133 level in a heartbeat. And what's going to happen is that what blows my mind is that the correlation, sorry about that, is quite clear that the dollar index wants lower price. As the dollar wants lower price, of course, metals want higher price. They've already got crushed. We know that the amount of money to get gold out of the ground is basically, about 1189, 1089 to 1189. Bottom line, when I look at, what's wild too, is that when you look at the aspect of inflation, deflation, all of the above, in the things that we still need, meaning food, clothing, some clothing, and shelter, we have inflation, man. I mean, things are expensive. Well, things are expensive in the context of how much they cost versus what an ounce of gold costs. That's where my head's at more than anything. Because what ends up happening, so picture this. When an ounce of gold, you need 10 tons of dirt. It's like, okay, you need 10 tons of dirt. And I can buy an ounce of gold, well, it's $11.21, but you're going to really pay $1,200 for a coin right now, okay? But when I look at 10 tons of dirt and I look at an ounce of gold, I'm saying to myself, well, that's a good deal. So we'll see where the whole thing, does shake out. Volume, we're getting volume out of all the structures out here. We've already done 46 million inside the SPYs. We're going into 173 million. That's going to have some juice. This is Tom O'Brien. This is TFNN. You stay right there, folks. We come right back. Dow's down 248. Nasdaq's up 78. S&Ps are down 28. We're going to be right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow down 236, Nasdaq's off 77, S&Ps are off, let's see, where we're at, down 27, and gold continues to go, man. We're up 1420, silver's up 226. Let's go over and take a look at that silver market for a second. There we go. So inside the commodities market right now, this is what you have happening. You have the natural gas is up 1.7, you got gold up 1.2, silver's up 1.7. And, okay, so we go take a look at the silver market. Okay, silver, we're trading out at 15.54 right now. This is a nice setup, man. We already have 44,000 contracts. That is a nice number, folks, at all of 10:35 in the morning. So what you're doing is this. Yesterday we had 65,000 contracts. Prior day you had 57,000. This is saying your next stop on silver is 1623. Now, it looks to me when, we'll see whether we get any flack at that area. I suspect we're not going to. The reason being is that when you come off a low like this, that has been a nasty low, that the whole world is on the wrong side of the deal, it's a lot easier to bust through those areas. But bottom line is that, the first layer is at 16 bucks. That'd be a nice move. That's a $1.50 move off the bottom. The next legger is going to be up there to the 1770 area. Now, what gets intriguing once you get up into even the areas we're at right now, and this has to do with the whole ETF structure again, is that you're going to get buying inside the SLV also. We'll see what shakes out there. Last night, inside the SLV, as well as the GLD, and in fact, the last 4 days, they have been unchanged. Now, that will happen. That'll change. And the reason it will change is that it has to do with the net asset value. The GLD, the SLV, they have to stay inside the net asset value. Then the net asset value, specifically, what ends up happening is that they got to add or subtract gold and silver holdings as that goes higher versus going lower. If we go take a look at now the XAU, the HUI, they get huge amounts of work that they still have to do. There's no two ways about that, because the amount of damage that was done inside the gold and silver market was extensive, bottom line. Now, it doesn't mean that it can't get repaired, but they still got a lot of work to do. The XAU right now is trading out at the 5168 area. That has to get up and over the 5344 area first. And there really hasn't, in the XAU, there hasn't been a lot of buying. We go over to the HUI, there's decent buying, but not the type of buying that it's going to need to get up into higher price. There's more buying that's actually has been taking place inside the contract versus the HUI and the XAU. The HUI, same type of setup. Now the difference is, which would make sense, the HUI is already into the gap, okay, which is positive in a huge way. The top of that gap is 128. Yeah, 128.18. The one that it just overtook right now is 121.98. And we won't get the volumes on the HUI and XAU until tomorrow. But what I do expect is that you're going to see an expansion of volume. The real key is going to be, does that expansion of volume give us what you need in order to basically get up and over into real price? If we go take a look at Rangel Resources, it looks like it might. You know, Rangel has always been one of the strongest gold stocks out here, and that's already done 505,000 shares. Bottom line, you're coming into 627,000 shares. So Rangel's going to do some big numbers out here today. There's going to be an accumulation inside this market. What's really wild, there's no doubt, is that, which totally makes sense, by the way, because as funds are moving out of markets, okay, and there's not enough room to get out of the markets, you know, this is kind of the first time that you actually see a sector, and it happens to be the metal sector in this particular case, that is, I think, is probably the only sector that's green out here today. That is so unusual, it's just a mind blower, you know, but the divergence in that would say something, and that would say that, yes, the whole world is devaluing currency. Our currency will go down, but as I said a little bit earlier, is that our currency will still be the strongest currency probably in the world. It's just that they're all at lower prices. As they're at lower prices, guess what? Metal's at higher prices relative to where everything else is. You know, so some of the high volume stocks that we got out here today, you have, let's see, Apple's down $1.60. You got Marvell off $1. You got Citigroup off $1.90. Facebook is down $2. You got JP Morgan off $1.50. GoPro's down $4.70. Some of the Dow stocks, what do we have? Boeing, they're all disgusting. Okay, so you got Boeing, let's see. They're changing so quick. Disney's down $1.90. You got Boeing down $3. You got Honeywell off $1.35. Marvell's down $1. You got Big Mac down $1.36. JP Morgan's down $1.53. The financials are the ones you want to watch out here. So let's go take a look at the XLF. The reason XLF. So financials, we take a look at the XLF. The XLF has been holding up big time. What we have out here, she's going to give it up. Pretty wild. Okay, so XLF has the juice, has all the above. 24 million shares. She's taken out, look at this, man. When this falls apart, it falls apart. Man. Okay, so it's blowing away the swing point, and just bang, just like that. So the last swing point out here was the 27th. You had 28 million shares. We're already done 24 million. So the XLF is on its way down to $24, down to the $24 level, of course, the last swing low that was generated July 7th. But what you also have out here is the $22.89 level, which is back in February. You know, so you know, technically across all these markets, folks, you got problems. Fundamentally, there's problems out there. Now, technically, as I said at the beginning of this show, it looked like that we were down big numbers. These numbers, folks, are going to escalate going throughout the trading day. We're talking about it's only 10:41 Eastern Standard Time. Now, our Dow is down 1.3, S&Ps are off 1.4, and the NASDAQ is down 1.5. Well, guess what? Since I started the show, the European markets, you talk about getting toasted. You got the CAT almost down 4%. The DAX is down 3.5%. You're talking monster numbers, man. This thing is not stopping. And in fact, it's escalating going south. So, you know, when you're talking about the market, and you've only been in the market for an hour, and we get this kind of deal happening, it's problematic. Now, watch something. Okay, this is what you absolutely want to wrap your head around. Let me pull this up for a second, because what we should have is fear, right? bottom line, it's that, hey, guess what? You know, your market's coming down. You think you're going to get some fear, right? Not even close. If we take a look at the trend, okay, what you're going to see is that we're at 1.11. Do you know what that means, folks? What that means is this, is that when you're at 1 in a trend, that means that that there's zero fear. I mean, it's like insane. When you get fear, the trend would be running 2.5. I've seen it as high as 5. The bottom line, there's zero fear, which is just a mind blow, okay? If we take that in correlation with a downtick or an uptick, what you're going to see is the same type of setup. So people are basically staying there, maybe even buying this thing, okay, and getting toasted and roasted. So the tick is only minus 1147, and a minus 1147 is nothing, folks. There's zero fear. You know, and with zero fear on a down market like this, guess what? It's not going to stop. You know, the way that markets create and get a good bounce going is when everyone throws in the towel simultaneously, and then guess what? There's no more selling. That's what, you know, that's what we've had. Remember, I mean, for a month, we had no sellers inside the gold market. We had no buyers, but we had no sellers. You know, if there's no sellers, you can't go lower. That's just how markets go. It doesn't matter what something's worth. It matters what, are they buying? Are they selling? What are they doing? Bottom line is that I expect what you're going to see is you're going to see, if we go take a look at these S&Ps for a second, watch. We take a look at these S&Ps. So we've hit the 46 area. We're at 52 right now. You got the high, and see, this is always sweet when this happens, meaning the correlation. You have the high, well, you broke an ABC structure on the way down, which is 2037. That's the number. And what do you have? The spike low today has volume. So this is just, number one, it's going to be down there. Number two, you know, what you're going to probably see is that we're going to be at that 2037 level, which gets the S&Ps down almost $40. That'll get the Dow Industrials off about 350. And that will get some news, folks. That will definitely get some news when you get that, if in fact that's what we get. But that's how this thing is setting up right now. The NASDAQ, the comp, that it looks to me like we can close out. It'll be easy for the comp to get down another $40. And right now you're down 82. You know, so. The dollar, if we go back to that dollar for a second, dollar's breaking swing points. Yeah, we had 43,000 contracts. I think it was 46,000 is the number. So you get monster volume. It's 48,000. So when we started the program, it was at 35,000. Bottom line right now, you're at 96.16, and that baby is on its way down to 93.30. Now, folks, let's go over to our man, Mr. John Logan, who kicks us off every trading day at TFNN. And as you come over to our website at TFNN, folks, if you go right to the front page, what you're going to see is the TAS profile scanner. You can test drive that right now. 14 days, absolutely free. John kicks us off every trading day. And remember, you can get right on your cell phone all the programming, tfnn.mobi. If you want the video, just go to tfnn.com, hit the box on the right-hand side. John Logan, what's going on?
Finally get our day in the sun here with the market selling off.
Oh, man, it's you know, and you know what's amazing, John, is that it's wicked. I feel bad for people that are long-term holders because it's like there's been so many bounces, man, that people unfortunately won't get out, you know. And it looks like our markets are down a lot, but this is nothing compared where I think I'm going to go even today. The DAX is down 3.5%, man. Yeah,
I mean, this is. I mean, we are barely off all-time highs, as you know.
Exactly.
I mean, in the grand scheme of things.
Exactly. Right. Right.
And this thing in China, it's been boiling. You know, the Greece thing, 3% of the European economy, blah blah blah. The Puerto Rican thing. This, is a big deal.
Yeah,
you know, I mean, this is something to pay attention to, and this is unsettling. I mean, Juan and I talked about it this morning. I don't know if you caught any of that.
I was listening.
Yeah, I mean, it's just, you know, there's actually kind of a sea change feeling. I mean, you know, me and him talk about South America all the time. I
Hey,
mean,
you're gonna kill me. But you know what I was gonna text to both of you guys?
What?
When you guys said you're on the same page in gold, I was gonna say, yeah, but you're in the wrong book.
Hey, you know what? This thing could blast up $200 an ounce in a
I had to say that, man. I had to say that. No, listen, I know.
Yeah, I just my personal feelings on gold are, I mean, I just think we should be reacting a little more.
Oh no, listen,
upside.
I agree. Listen, man, you know what's so cool about markets, folks, is that things are the same and things always change, right? Because, you know, as I'm looking at this, I'm saying to myself, you know, I don't know if you heard me this morning, I'm saying to myself, you know, I can understand why everyone thinks the dollar should be higher, and I can understand all of those ramifications. But when this one really started happening, and now I'm saying, oh man, I get it. You know, I think I get it anyway, okay? and what that is that the devaluations are going to happen everywhere.
Yes.
Our dollar is still going to be king dollar, and that's going to be at a lower price. But everything's at a lower price except things you actually need. That value will be higher, which is because that's all that really matters. What matters is how much you can buy with what you have, right? Because that's all money is. It's such a perception of, you know, what it is.
Well, they have a completely different style of conducting business in Asia. I've learned that over the years, and China especially.
Yeah.
You know, the Chinese, everything's on the table all the time. I mean, there's nothing that is off limits as far as normal business relationships. Are we going to break now?
No,
we still?
I don't think so. Oh,
Okay.
yeah, I guess we are. Hey,
Okay.
Stay right there, all right?
Okay.
Hey, listen, you know, are you feeding that little cricket in your office? If you heard John this morning, folks, he has an amazing show, too, by the way, folks. He had a little cricket in there this morning. It was a beautiful thing. I was waking up, looking at it. Stay right there, man.
Oh, my God.
I love it. We're coming right back, folks. Dow's down 248, NASDAQ's off 82, S&P's are down 28. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials right now down 256. You get the Nasdaq off 87. S&Ps are off 30. We're talking with our man, Mr. John Logan, who kicks us off every trading day, 8 o'clock in the morning, folks. Outstanding program. He had Juan on today. He goes over all the markets across the world. Juan's down in South America, really dynamite, and it's so cool. And, John, I really want to thank you for, a great show, bringing on some great people, because it's so cool, man, when, we're really spreading out now, and after the show, after us here today, folks, we got Basil coming up, we got Steve Rhodes, we got Daryl, we got Dave White, and we're going to be back here this afternoon. Now, if you haven't test drove the scanner yet, folks, come over to our website and do it. I know, now, you did an upgrade today, right?
Yeah. I mean, we basically kind of built this from the back end part first, and the user kind of cool functionality is always what we're looking for.
Yes.
As suggestions from users. So I just posted something, and then just anybody's got to just email me directly. We kind of got some new things out today, but obviously there's more things to do with it. And we can do these programming little ordeals pretty quickly. And we got a couple of guys that are just sitting on the edge of their seat ready to make changes right now. And Tom, I've been talking about these beta charts for a while.
Yes.
We're going to be able to roll this out next week. So then it's just an amazing total package. I like to use this scanner without charts because it doesn't cloud my mind with my own little intuitions.
Right.
By looking at classical setups and things like that. But charts are a big deal for folks, and we'll hopefully satisfy that.
Hey, look, you got a dollar index chart up.
Yes. And this is something, we always talk about, you and I talk about this all the time. It's like, where are the breakouts and where are the support levels? Right. Or where are the breakdowns and where are the resistance levels? Well, these profiles really within the scanner, especially, I'm showing them on the chart just to give people visuals. But,
yes.
We've got a 98.31. We talked about that was the target on the last move up. And, not to necessarily be looking at that as a short opportunity, even though it was a great one. We want to let the market come to us, either break out above the 93.10 level, close on a daily basis, or come back down to the support level. Now, I'm not saying this is going to bounce from here,
right?
But imagine trying to, go long this trade in the middle of the profile itself when you really had no high probability area to pick the battle on. And now you're here, and you waited patiently, and that's what trading's about, is being patient.
It is. Now watch this, folks, okay? And this is what's important. Okay, so when you're trading any type of indice, you want to know what's inside the indice, okay? And so inside this indice is 60% of the euro. And if you had listened to John's show this morning, John and Juan are talking, right? And this is where man, markets are just so cool. So Juan had brought up, folks, they're talking about the dollar first, okay? And it was the same type of relationship and correlation. Then what happened? They brought up the euro. But when they brought up the euro, right, what was the conversation? The conversation was, oh, man, hold it. This euro is in a gray area. The next profile is so much higher, right?
Yeah.
Okay, so what you want to do there is what, folks? You put together that aspect that, number one, that euro is that much higher. What would that do? That would do to me that you don't touch that dollar. You see what I'm saying, John? And that, and I've got that from the gold market in the last 13 years. I mean, those correlations, man, are so important. But isn't that wild? Because when I heard Juan say that, I said, oh, look at this, man. Because, you know what I'm saying? Because the profile was showing that, hey, the danger here is that the euro does want to go higher, which I know is insane, but guess what? That's what the profile is setting up, man. If it, you know?
Yeah. And you know, to be honest with you, like you can put together your own custom list in here very easily now.
Yes.
In the scanner, I've got a couple of test little things there now. We're taking comments all day to make upgrades again.
Well,
tomorrow.
listen, man, thanks for coming on. We look forward to the show tomorrow, and look forward to growling and prowling with you, man.
Lovely.
Have a great one. Have a safe one, folks. You stay right there, man. Mr. Basil Chapman's coming up next.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.